A lot of news this week in the United States about copyright protection and the Aereo decision, but there's actually an even more interesting story going on in China with a company named Youku, which is trying to figure out, navigate the copyright rules with internet television. Rob, you did a nice column about this.
Yeah, so the column is taking a look at this. They're a scrappy little company, about a $4 billion company. But actually they're kind of like Netflix, YouTube, Comcast, all rolled into one. And if you are interested in understanding what's going to happen with copyright protection, particularly as it comes to, it refers to Hollywood, television, movies, it's really interesting to watch these guys because
it's a notorious issue in China in terms of just violations of copyright
China,
from Western content.
It used to be you could walk down the street and you'd buy pirated DVDs, same ones that get copied and go on the streets here, and there was no crackdown really by the government. The government didn't seem that interested. But last week you had a pretty big event happen. So this company called QVOD, which is a venture capital backed website, was fined $42 million, which is almost certainly going to mean game over for these guys, by the Shenzhen Market Authority. You have a whole new drive by the government, the central government, that is basically pulling together 4 different departments to try to crack down on piracy. So you're not only seeing the rhetoric, because this is actually every year they come down and have a clampdown, but you actually see this happening, this $42 million fine, 260 million yuan. It's a big deal. And so what you start to see is actually the converging interests between Hollywood, which is producing this stuff and doesn't want it pirated,
and would love to make some money out of it.
And would like to make money out of it. Gigantic market. It is already the second largest market for box office, but it's going to be much bigger. And the government, because the government actually wants, if you look at the Chinese Communist Party, one of its platforms is to have culture created that has sort of a soft power.
So what is the model? So what are they trying to do now?
It's a combination. So there's advertising is a big part of it. So you go and you watch clips, and there's advertising before and after, bookended, and then they're going to have it along the sides. They're working with Alibaba. Alibaba bought like a 17-18% stake in the company. Okay. So they're going to have a huge mobile and internet platform that's just beyond what they already have. And then the other part is to buy. You can buy individual movies, just like you can on YouTube, or you can stream it.
There's all sorts of revenue sources.
There's a bunch of revenue, but the point is, all of them, basically, they're requiring Chinese consumers to get habituated to the notion that they have to pay for content. And that is why it's in the interest of Hollywood.
So they'll get the backing from the studios.
Yeah, they're doing deals with all the studios. Now, the studios aren't making any money out of it. Their content costs in the first quarter were $52 million.
This is an investment in behavioral change.
That's exactly what it is. But again, the interesting part about it, the government needs there to be a flourishing market for content in China so that there are, Chinese producers, directors, actors can also produce stuff that might be in the long term. It's just the Chinese Communist Party. The issue, of course, is whether that content's going to be the stuff that people want to watch. Yet another sort of, feudal drama from the Ying Dynasty or whatever is not necessarily going to be the stuff that's commercially exciting. And there are so many, like Youku has 300 people who are just employed censoring stuff. Right.
So the content looks a little bit different. Anyway, that sounds like a great story. We'll keep an eye on it and be back with more breaking views next week.